Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Thanks for joining us on the podcast today. I've just jumped off the interweb. I was just looking at Smart Property as it sits within iTunes on the Apple platform. Obviously, most of you guys probably look at it on your phone, but it also does exist on iTunes on your computer. And I was just reviewing some of the commentary we've had from our listeners over the last sort of period of time. And I'm happy to report that there seems to be quite a lot of satisfied listeners out there who are giving us 5-star rankings. So I get a lot of satisfaction out of that. And I know the team outside of myself who are the engine behind this podcast really get a kick out of reading the fact that you are enjoying this podcast. There's also some constructive criticism there, which I am also a big fan of. And we're working on looking to always evolve the podcast as we move forward. And one of those is around ensuring that we keep our focus on storytelling from property investors. And this has been the genesis. This is the origin of the Smart Property Investment Show, is that we want real people coming on here talking about their portfolio, their life, the way they see property, why they're using it to as a tool for wealth creation, and eventually what they'll do about it. So we want to do more of this stuff, and I'm hearing loud and clear that that's the type of commentary you want. So we'll keep a focus on that. So if that sounds like you and you want to come on and have a yarn with us, more than welcome to come in. Investors of all shapes and sizes, whether you are thinking about buying property or you've got 50 properties, everyone has a story to tell and everyone can glean something out of everyone's story. So contact the team editor at smartpropertyinvestment.com.au and we'll hook that up. We'll sort it out. It's pretty easy stuff. It's not too concerning. It's not too onerous. Don't be scared about coming on and having a chat with us. It's supposed to be pretty relaxed. And I think our guest today is going to fall into the latter on the relaxed category. He's been listening to the podcast for a little while. He has appeared on it once before. So go and Google if you want to stop now and you can have a listen to the stuff he spoke beforehand. Luke Moroney, he is a property investor and he's here to have a chat about his portfolio and how he sees the world. Luke, how are you going?
Very good. Thank you for having me, Phil.
Have you put a review on the Smart Property Investment Show? I think you have.
I think I have,
yeah.
It would have been a while ago. So, with so much going on in the world and so much that I'm doing in investing, you just forget these things.
Forget about it. So, we do enjoy getting that feedback and we'd like to be pretty reactive in responses to it. What would you, if you got me here right now, what can we do better, do you reckon? What would you like to hear more of, not see more of, hear more of on the Smart Property Investment Show if we could do it?
I'd be thinking about the controversial topics that come up and, just making it raw and real as much as possible. I guess there's a lot of people in investing that, tend to sit on the fence sometimes. So is it, what's your true opinion? And everyone's going to have an opinion at the end of the day. We just don't know what's really going to happen, what the forecast is out there. No one's got the crystal ball. So, as much opinion, I think, as possible is going to help investors.
Okay. And you listen to the show a bit. I think you've listened for a little while, which is cool. Would you say that I have an opinion towards property? Or would you say I'm one of these neutral guys that don't really sort of lean any particular way?
I think you have a concerted opinion about where your direction is as an investor. And I think you follow on a path of, where the growth is, where the low risk is. And, I probably see it very similarly.
Yeah, so let's have a chat about your investing journey. Let's start at the end, so where you are today. Just can you give me some idea of how many properties would be in your portfolio?
Yeah, I've got 30 properties in my portfolio right now.
Okay.
So there's a bit of a mix of different things going on within the portfolio. The last purchase that I made is up in the Moreton Bay area, up in Brisbane. It's a property that has... it's on about 800 square meters and has the ability to actually go 7 stories high. So it's a bit of a development potential opportunity. It's right next door to, or very close by the new university that's being built out of Petrie.
The Sunshine Coast University.
That's correct.
Yeah, we bought an apartment block up there about a year and a half ago, right there in Launton, which is of just on the bottom end of it. So it's pretty good. So that's the last property is 800 square meters in Moreton Bay. Where which suburb?
It's in Petrie.
In Petrie. Oh, actually in Petrie. Okay. You're probably going to do pretty well on that, I reckon.
Yeah, it's about 300 or 400 meters away from the university and the train
walking
station.
Distance.
Very walk, yeah.
And sorry, how high can you go on it?
7 stories.
Okay. So how many units?
So we're looking at 22 units.
Okay.
It might even be a potential to maybe put in sort of like a student accommodation setup.
Okay.
And that could be like something like 75 rooms.
Okay.
So, but you've got to look at the whole idea about what's actually happening right now. It's yet to be built. So there's no students coming in, and you've got to have a look at the whole thing about where the students are going to come from as well. So, obviously we're looking at mostly buy and hold on this podcast, but from a development perspective, you've got to think about, well, are the students going to come from local areas and they're just going to live at home? So what's the point of having student accommodation? If there's an influx of that, you're really not going to fill your quota in terms of getting a profit on the deal. So, I guess that goes into the development space, but it also goes into, supply and demand when we're thinking about our own portfolios as well. Are you going to get tenants? Is there going to be growth because there's an undersupply of property or affordable property in that suburb?
So you've bought that property on the basis that there is upside potential.
Yep.
But I imagine knowing the fact that you've got 30 properties, you've been at this for a little while, that will probably stand the test of time by itself if you never do anything with it, right? It's
That's
probably
right.
quite well yielded. But so it sounds like you've got a lot of work ahead of you to actually understand this supply and demand dynamics, as in number one, where are students coming from? Number two, do they want to live somewhere? Number three, what sort of accommodation are they going to move into? Number four, how much of that already exists? So there's a lot of work to be done, but the fact that you're dabbling, and I'd use inverted commas, with potential development sites with 22 units, you're not messing around, right? You're not going to be doing that as your first property purchase. 30 properties in a portfolio, you are probably representative of, well, I know that there is 0.07% of Australians own 6 or more investment properties, right? So I reckon there's literally 0.00 something number of Australians that own probably 30 properties or more, right? So you are the very small, you're the tip of the spear or the iceberg or whatever analogy you want to use, right?
It's great to be in a position to be able to do this. I think, there's a lot of people that come to me and say, how did you do it? And I think everyone's story is going to be a little bit different. You can't just compare yourself to someone else because incomes are different. The timing of that situation when you start investing is going to be different. I know back in 2014, 15, 16, or even 2013, where finance was a lot easier than it is now, and you could actually get apply for 2 loans at a time. So, there's a big factor of difference between then and right now. So
markets move in cycles, and as a property investor, if you can sit within 2 or 3 cycles, 4 cycles over a lifetime, you can benefit from that. It's just where you enter it and where you exit it. So that's the most recent property.
Yes.
What did you pay for that?
575,000.
Okay, so 575. What's there's a house on it right now?
There's a house, and it's negative at the moment.
Yeah.
So
what sort of rent you getting? Sort of 450?
No, it's a little bit lower. I think it's probably 380 or something.
380.
Like that.
Okay, so that'll eventually wash its face, and you sort of that. And the fact that you got 29 other properties, I'm sure there's.
But I guess as on that point of that particular property, I think as an investor, when you grow your portfolio like that, sometimes it's a really good idea to experience other markets or experience other ideas, because you don't know what it's not always about the money. I feel like, what about the learning experiences you can have? And you just don't know which particular property is really going to, have the great capital growth, and maybe one property is just going to go to extreme for a reason unknown right now. We're always putting ourselves in a situation where you are looking for a low risk strategy and for the potential for growth. Now, development sites, you might find that some of those sites are like $1 million, $2 million. And then for me to buy something like that, taking on a lot more risk. But for $575,000, it's not a huge risk in terms of my portfolio. So I think, the learning aspect, I think people forget about sometimes, and you can actually, once you have skin in the game, you learn so much more.
Yeah. So let's go back in time. So that's the most recent property is Moreton Bay, Petrie area, 575, potentially build 22 plus units. What was property number 1 for you, and do you still have it?
Well, it's pretty close to where we both grew up.
Okay.
So, making the big mistake of buying close to where you live and not really having any education, any skills, any knowledge. I bought it in Blacktown.
Okay.
And
nothing wrong with Blacktown. Great place to buy property.
Great place.
Great place to grow up.
That's right. And it is a great place. And the subsequent purchases have been very productive and very profitable, but that first one wasn't. So I bought it in the peak of the market about 2002. It kind of reminds me of the 2017 market in Sydney. So, or even sort of late 2016 for the Blacktown market, when things were starting to decline. So So I think
So you bought the top of the last cycle, essentially.
That's
so it
right.
went up, then it went down, then went up again, and it's sort of slightly gone down again.
That's right. So it was basically 10 years without growth.
Okay.
So, and I also try to manage that property on my own and just failed with about 4 or 5 tenants in a row. And
Where in Blacktown is it? Like
it's Bungarraby,
okay,
Jennifer
Bungarraby Road.
Avenue.
Yeah, I know.
So-
I delivered pizzas in Blacktown for like.
He knows every street.
I know every street. I know every street, every house. I know the bad houses as well. I'll tell you.
Is that how you get some property education, by being a delivery?
You know what? You get a lot of good intelligence when you're a pizza man, right?
On the ground every day.
On the ground. Yeah, 4 or 5 years, I think. I was out of Seven Hills. I was the pizza delivery guy, and that was our, I delivered pizzas right through there. So anyway.
Heyday.
I digress. But so was it a house? Did you buy it?
Yeah,
Okay.
three bedroom house. It's on a cul-de-sac street, so yeah, nice and quiet. And then eventually, the rent was increasing. The capital growth came through later on. I think a lot of people that I've spoken to over the last couple of years who actually sold out in 2005 lost a lot of money.
Yeah.
So unless they took the opportunity to move that money into other markets that were growing, would have been good. But a lot of those people, and when you probably hear it all the time, where they actually have that one mistake in property and never go back, and they just don't think that property is ever a great thing. But if you learn through that experience and make your move, I think you can actually just grow a portfolio, whether that's to 5 or 10 or 15 or 30 like I have, or maybe 100 like other people have.
Yeah. So do you still have this property?
No, it's gone.
It's gone. When did you sell it?
It was actually I actually converted it over to a vendor finance deal because I started to get involved in that a little bit. So that person came into the property, was on a 5-year contract, and they were actually able to refinance that out to a traditional lender in about 18 months because there was capital growth. So they made money, we made money on the deal, and so that came out in about 2014, 15.
Okay.
But
you would have done well out of that, right?
Yeah, eventually, yes.
I wish I'd go back in time to 2002 in Blacktown.
How many people say that? Oh, I wish I bought property in Sydney 20 years ago.
Yeah, that's and it is, what is it, 18, 17 years ago? It's a long time ago now, right?
It is a long time.
If you bought up big there, you'd be doing very well today. So the sort of psychology, the philosophy you had towards investing back in 2002, it would appear is very different today.
Absolutely. I had no idea.
What's been the biggest shifts for you from, if you have to look back to, Luke Moroney, 2002, hungry to get into the property market, probably ill-informed, not educated as much as you could do, to where you are today? Go back in time and talk to that guy 18 years and say, mate, you got to get this right.
I think there was an interest in property all the way through. I think what I lacked was the education and the skills. And I think it was about me just like, okay, I need to put some effort. I think subconsciously I just like realized that I wasn't putting any effort into it. I wasn't really educating myself. I started to actually read some of the property investment books, and the more I looked at it, I was like, that makes sense. Kept hearing quotes and reading emails about, 90% of millionaires make money through property, and hearing that all the time and getting a sense that I don't always see myself being in a 9-to-5 job. That's sort of ingrained with me. It's in my DNA. So I just really reflect on that all the time. I started to sort of work my way towards meeting with people who were talking about investing, talking about property. And just the more it came about, the more I was drawing myself towards that aspect. So it was about going to seminars, and not only going to seminars, but really talking to the people, going there early, being the first one there and the last one to leave. So I just think when it comes to investing, when it comes to business or your own employment, if you put in the hard work, you get the results.
Yeah. So the advice to your younger self would be, get educated.
Educated, absolutely. I think, you want to just put yourself in front of people who, kind of like a mentor, right? You want to put yourself in front of people who have got the experience. And there's so many of us in this position that have got multiple properties that are willing to speak to people about their experience. I'm meeting up with people regularly, telling about their story as if they've just started or they've got experience or they're in the property industry right now and helping other people, but telling their stories about how they're actually moving forward. So, I love enjoy telling stories and, hearing from, people like yourself and your experience. And I think we can just help each other so much.
So how did you go about building out a portfolio from 1 to 30 properties? And it sounds as though you're definitely not done with that. Was it a very deliberate or haphazard strategy initially, and then you started to get a little bit more sophisticated and targeted because you've gone from just buying a house in a cul-de-sac and you think, oh, that's okay, through to more sophisticated buying where you're thinking about not the purchase today, but what that purchase will be in 5, 10, 20 years' time, whether it's an asset you develop yourself or something you can sell to someone else who gets those upside benefits. When did you start getting really sophisticated, you reckon, on this journey?
Yeah, I to be honest, like the initial stages was a little bit haphazard, I would say. And
my experience was very haphazard. I was just yeah.
Well, the first one was definitely haphazard. Yeah. Like it was just, okay, just find the property, take action. But I think, in saying that, the haphazard happened, but the best thing you can do, like I said earlier, is about learning. And people are just afraid of that failure and have that fear. And some of the action that you do take, as long as it's not extreme risk, but some of the action you do take is just actually a really good learning curve. And I'm really glad I actually made that mistake on my first property, because you probably hear it from a lot of investors of the mistakes they're made throughout the building a portfolio and the worthwhile exercises that you learn through that experience. And I think that's what holds a lot of people back in terms of getting started. They're just afraid of just losing everything. But I think there's ways that you can sort of mitigate at least a lot of that risk, but you can't always mitigate everything. So I guess the big focus for me really was go hone towards that education, like I said, but really connect with some of the mentors, people that have been in the industry a long time. I do remember my mortgage broker actually saying to me, that helped me build this property portfolio quite significantly, was that period in 2013-14 where that was saying about the idea of different markets around the world where finance was getting tighter. So, and the disparity or the difference between what an owner-occupied loan interest rate was and an investor loan interest rate was. And there's it's going to get harder, guys, in future. The best thing you can do right now is take action and buy property. So I made the most of that. So in 2013, 14, some big years. I know some other investors that I was speaking to at the time, they were buying 10, 11, 12, 13 properties in that year. So, that was a significant way to really increase your property portfolio when the times are good. So, I always go, there's a saying I have on my phone each day. It was take extra risk when the times are good.
So you're quite fortunate and, again, unique, not only sort of getting to the number of properties you have, but you sort of look at it as a mistake, your first property. So most property investors make a mistake the first time off and only ever own one property, or they've got to sit around and wait another 10 years to actually get to 2 properties, and then that's it, right? That's representative of most of Australia. So how did you leverage out of a mistake in hindsight into property number 2, 3 and 4? Was that hard work, or was it relatively easy for you to do that?
I think it was hard work in terms of my employment. Like I said, in terms of the seminars that I attend, I was the first one there to work and the last one to leave often. So I think having that hustle and I guess patience for the long term to actually make sure that I'm putting in all the work now for the rewards down the track, and growing that income through employment, and focusing on that education, and then getting the finance availability to grow that portfolio over time. And I touched on the vendor finance idea, but it was one way to really increase my cash flow to present a better story for the banks during that time.
Yeah. So what was the second, third, and fourth property, if you look back to that?
It was actually back in Blacktown.
Oh, was it?
So it was
back to back in Blacktown.
It was back to back in Blacktown. So I saw the mistakes that I'd make on the first purchase, and the second one was around the idea of, okay, well, that market's done bad for so long. All the reports that I was seeing, that is Blacktown's going to be one of the first ones to really go in Sydney, affordable price, entry price for me to get into, and I made, I think, 2 purchases during that time, Blacktown and Warrington as well. So
Warrington near Penrith.
That's right.
Yep.
And it was just a real significant way for me to then go on top of that growth moving forward in the property portfolio.
What were you paying for those properties? Probably mid-2s?
I actually bought the Blacktown property where I was the only person to bid at the auction. It was a 4-bedroom house. So it was $460,000 or so.
Okay.
Yeah.
And then Warrington, what sort of
Warrington, 3-bedroom townhouse. It was at, I think it was like high 200s, early 300s.
Yeah. Those prices moved on quite a lot since
They
then.
have.
Yeah, no, that's cool. So you were still Western suburb centric, and buying around that period of time. You if you look to where you are today with all this stuff, great buying, right? Like you never replace those prices. When did you start sort of shifting outside of that geographic footprint and sort of going to other areas?
That was about 2013. I guess there was a lot of talk around markets and around experts about the Southeast Queensland market.
Okay.
I didn't really know anything about it. So again, tap into the experts, get a knowledge of what's going on in those markets and really get in there and took action. I know that you probably got a similar one that you've bought in Woodridge.
Oh, yeah.
So that was my first.
Woodridge is cool.
It is cool. It's really cool. And I've actually, it's been a good success. So I bought a 2-bedroom townhouse. Look, the growth hasn't been there on that property, but the cash flow is extraordinary.
Yeah.
So I've had the same tenant for 5 years, so it's really worked well for me.
And this goes back to balancing out your portfolio. You've got some properties which are negatively geared or negative cash flow, but then you've got high yielding properties that might not have the same capital growth play, which offsets your sort of more capital growth orientated properties. And this is what you can start doing when you start manufacturing a portfolio and having a diversified portfolio with different assets in it. Different assets in terms of there might be houses or units in different states or different markets or whatever, but then different assets in terms of the utility of those assets. Some are high yielding stuff, some is cash flow, some are capital growth based stuff. So on that basis, then, what are you trying to achieve out of this property game? Is this do it because you like doing it? I imagine there's a bit of that, or is this more of a
Yeah,
let's make a few bucks and enjoy. What sort of value would you say your portfolio is now?
Oh, that's a good question.
Yeah.
It's probably around about, I think 11 million.
Okay. And what sort of LVR do you operate at?
I've always said to my wife that
it sounds like you're a bit risky, so
I know I'd actually take more risk if it was, I guess, my choice. But in talking to my wife, I always sort of remained that we would have 80% or lower.
Okay.
So
80% is pretty high. A lot of people think, whoa, 80%. Yeah.
Yeah. So it's probably somewhere around about the 70% mark at the moment.
But you're still accumulating, right? You're in this so in the cycle accumulation. So you're building it up, then you're sitting around and wait, then you get rid of it, right?
I guess I'm forced to wait at the moment because, the banking situation as it is right now, it is a little bit more difficult to borrow money. Obviously, there's other ways to invest without money, joint ventures and things like that. I haven't explored that too much personally, but I think there is... moving forward with my portfolio is really about, going for those cash flows, but then going for that, larger parcel of land and looking to build some of those land assets. And, we always go back to the whole thing. They're not making any more land. I don't know if we're going to ever live in the sky or on water or anything like that, but at least in the medium term, it's a great way to go. And having 1,000 square meter parcels of land in 30 Ks from the city is going to, I feel like it's always going to win. So again, it's a low risk strategy with the potential for growth.
Yeah. And going back to the sort of why you're doing this, is this a retirement play, or is this a generational play? You want someone, it's
a way of life.
It's just a way of life. So it just is.
It is.
Yeah.
Like, I just think, again, it's not about the numbers for me. It's about a way of life. I quit from my job because I didn't have the flexibility and things I really wanted to do. I can just up and leave and go to LA or New York on the whim of what I wanted to do, or go travel, or go actually meet with people, or have a lunch on a Thursday and have an extended lunch, or whatever it might be. I think it just drove me towards having more flexibility in my life. And if I believe I'm actually working harder now than I ever have, but I have the flexibility to make that choice. And I think as investors, it's one of the things that people really want to look to move out of when they're looking at a 9-to-5 job that they're currently in. It's it's that flexibility, that choice. Maybe they want to do something else with their life. And I think as I progress, I'm starting to think about other things that I really want to do in my life. And, some of the charity work I do, and as much as I can draw myself into different areas, I will. And I'm probably really excited to.
Oh, you can tell you're excited about it. But
excited to explore.
Yeah. Was this an organic thing, or you just went, you know what, I'm not really happy doing what I'm doing right now. Property can be a vehicle for me to potentially shift into a different gear, and whether that gear is sort of forward or backwards in terms of slowing down or speeding up. Did you orchestrate this through your property portfolio so you could exit a 9-to-5 job, or did you start doing this property thing and went, oh, hang on a second, this is pretty good. This is changing the way I think?
Yeah, I think through the education, I realized that, a lot of people were able to leave their jobs, and I just like the idea of the flexibility. And the more and more I spent time in property, the more and more I realized it's like this can actually work. And I know when I just left my job, or just before I left my job, there's the realization that this is working right now. And I actually can leave before, I really have the money behind me. I had the fortunate circumstance my wife was working. So, that was all going well. So we had that little bit of protection in the way of if things didn't go well, she's still working and I could just pop back into another job, because I had a job that is probably well sought after. I actually was previously a strata manager. So,
were you? Okay. Well, there's skills, no doubt, that you're using today.
Oh,
right?
Absolutely. Like when you look at some of the off-the-plan apartments, but that's another story altogether. But, we did a lot of work with building defects and it was really interesting to see some of the experience that I gained through looking at that. And I haven't got a tradie background, but seeing some of those waterproofing issues and render cracking and extensive repairs to buildings, you just really need to be careful, like who is the builder and what's your liability as an investor moving forward. So
it's a good pedigree then. So you've always been in property, just sort of doing different stuff now. You're a property investor.
I was in travel for a bit of time, and I spent 4 years overseas, working in the snow fields of Whistler and on a cruise ship. So a couple of different things there. But when I quit out of travel, I didn't really know what I wanted to do, and real estate just kept pumping through my head. And I didn't really like the idea of sales agent. It's not really my thing. And I kind of just stumbled on this article about a strata manager, and it just sort of took me from there.
Well, you seem quite at home in property, which is good, but no pun intended. But which is cool. It takes people a long time to actually sort their shit out, right? And it sounds like you spent some time working it out as well, which is okay.
Yeah,
I'm
absolutely.
exactly the same story. I spent some time working it out.
What's the rush, Phil? There's a lot of people that want to do everything at, age 21, but I didn't really sort of discover things till I was like 30.
Yeah.
So,
which is okay. I got no problem with it. If some people want to start investing at 21, that's cool, but I sort of started a little bit later and hasn't sort of stopped me, or slowed me down. And I guess same with you. Is this the end of it, or are you going to keep at it? Is it still accumulate?
I'll be keeping at it.
Yeah.
I'll be keeping at it. There's just a lot of different ideas out there. I think on the back of what I've been able to do, it's some of those relationships that you can build really can take you to that next level. And I think that as property investing, as an investor, as you grow, you've got to think about what those relationships are. Are you talking to people who have the same values as you? Maybe they have a different skill set, but they have similar values. And I think if you get that value person and the connection works really well, spend a lot of time with those people. Put yourself out there to meet up with them for a coffee or a run or whatever it might be to move things forward for you, because you never know what their connections. I just met up with someone yesterday and today actually that I had met at a property expo 3 years ago. Okay. And we've kept that relationship. Nothing's happened as yet, but we're probably close to some things in the next 6 months or 12 months.
That's cool. So what's stopping you from going harder than what you are right now?
Finance.
It's what I expected, just
finance.
Yeah, tough. Well, it seems to be softening a little bit, to be fair.
Well, hopefully. I don't actually see it. I think that's all a bit smoke and mirrors at the moment and what they're saying. So I know that they've allowed a little bit more interest-only lending, but who can actually interest-only lend right now? Serviceability is still tight. So I guess that's the big factor that's holding a lot of people and myself back. I've got a situation where there's a lot of equity right there right now, but that's for the banks right now, or the lenders, they're thinking that takes on a lot more risk. But, who's more
But
risky.
if you're not hitting 80%, you think it's lazy equity, right? That should be working for you.
Absolutely all the time. But who is, with all the charts and checklists and everything that they have as lenders, who's more risky? Someone buying in the southwest or the northwest of Sydney with $1 million loan, and they might have one or two incomes in the family, or myself who's got 30 properties and got a lot of equity sitting there doing nothing. So where's the risk factor? But we don't do it the way that the old bank managers of the 70s and 80s used to do it, where it's more of a character play rather than checking the box.
Yeah. Well, what you're outlining there is the power of leverage, and if that's a new term to you, if you're listening to this, go and look it up, because it's how a lot of property investors actually build out large portfolios some people some people's risk appetite is at 50% LVR, some are at 60, some at 70. Yours looks like it's at 80.
It's probably at 90.
It's probably at 90. But, and this is the power of leverage. So but you need to be smart if you're using leverage to build out a property portfolio. That means you need to be buying well. You got to be buying well. You can't have any mistakes if you go down that path, because it can really hold you back or impact your ability to keep building out a portfolio. But this story is not over, is it, Luke?
No, it's not. It will keep going, and I look forward to the journey of it. I think, there's not I guess maybe I don't have an end game of it at the moment, but it's, everyone always says it's about the journey. It's not about the end goal.
Yeah.
So I guess that focus is still there. I'm enjoying every moment of it, and, the ups and downs. And I just think that's what it's about as a property investor. You're going to have some hard times, and then you probably got to put in the work. Someone actually asked me through a Facebook page, what if you get to a position of getting negative equity? And my reply back is get 3 jobs.
Yeah.
So put in the hard work. Like, investors need to do that. So if things don't go your way, then put in the hard work, get things done, remain that positive that you're going to get over that hurdle, and then you eventually will, because hard work results in, that better luck situation happening.
So hypothetical, if you were pre-approved from a bank and you had $1 million to spend, probably a bit too much, say $600,000 to spend, where would you buy and why and what?
I'd go back to Southeast Queensland.
Okay.
I know we're buying there at the moment as buyers agents, and I just like that. I like the market there. I think, again, it's the low risk. The potential for growth is there. I'd probably, in terms of my portfolio and how it's working, I'd be looking at something that had a little bit of a development idea on the back of it, or a potential that actually, maybe flip that property in terms of maybe doing a DA development application and be able to send it on. So it might be a little bit more creative than maybe a regular buy and hold if you're starting out with 1 or 2 or 3 properties.
Okay. Luke, I've enjoyed the chat. Make sure you keep in touch. Let us know what's going on. And
absolutely,
the next time when you've had another 10 proproperties, let's come and have another chat, which might happen in one hit, right? You never know.
There's a challenge.
There you go. There we go. Set it. When do you think that's going to happen by? When will we see you back on that basis?
Just
put a line in the sand. Commit.
10 properties. Say 2 years.
All right. That sounds right.
Wow.
Good one. Appreciate it, Luke. Thanks, mate.
Thanks, Phil.
Remember to check out smartpropertyinvestment.com.au. We're heaps of stories like this. People, property investors from all shapes and sizes, from those with 1 property, 2 properties, to people like Luke with 30 properties. So I enjoy this conversation. So make sure you get in touch. Editor at smartpropertyinvestment.com.au. Come and check it out. Have a yarn to us and share your story. Remember, social media, Smart Property HQ, if that's how you like getting your information. It's what we like to do. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.